Good morning, guys. Hope you're doing well. Apologies for yesterday. I was quite grumpy yesterday because we got stopped out on a trade on our robot, and it was just because we moved our stop loss distance. And I think that's the thing that quite frustrated me, is that if we had a slightly wider stop, we would have been fine on that particular setup. So we're going to keep the SL wide like we did before. No changes during the week. And what we're going to do next week, we're going to put in a trailing stop on the robot. So it'll basically capture profit when we have whipsaw. Look at the Aussie USD, for example, massive whipsaw to the upside and then downside. We would have caught both sides of that transaction. And we would have profited. So next week should be better because of the trailing stop in. And also perhaps is that the market sentiment will calm down slightly. So I'm thinking what might happen, because we're quite risk off, there's 6 people buying indices versus the 1 person selling. These guys are going to get flushed out at the casino. They're going to lose all their chips, and they'll have their tail in between their legs, and they'll leave the casino. And they'll think, why did I go long? Oh my god, I'm so stupid. They'll exit en masse, and then by tomorrow we should see this number decrease, and then by Monday we should see a big decrease. I'm not sure if we'll go risk on at the big picture, but we'll see this movement over the 24 hours because basically they'll be leaving the casino. They'll have lost a lot of money on their gamble, on their long bets, on indices, and they might not come back to the casino. We don't know. They might come back on Monday and they might try and sell. If they do, then we're going to see a big difference on the 24-hour. Technicals really dumped. Google was down 10% yesterday, which is really bonkers. VIX has gone a bit parabolic. The Treasury yield has gone up, which makes sense. It's a risk-off indication, and the dollar also rose. So these three going together in parallel is quite a risk-off indication. Nasdaq was down 2.4%. So you've got to be careful. We're seeing some quite heavy moves actually. Now this is obviously geopolitical, but it's also to do with sentiment as well, and this is one of the reasons why we're falling. The yield curve is inverted, so we don't want these guys buying indices when the yield curve is inverted, right? That's a big no-no. So we were okay to buy the dip pending that this remains green, but it's red. Okay, so there's a little bit of information there on how to use this dashboard risk calculation. QDB scores. UJ's got 150 on its 150.57. It's going pretty bonkers. We're going up quite a lot, but it did have a good score. So that's important to note. It's always in the top half, and it's been up here for a long time. So it's going to be a buy, okay? And we've got NU, GU, EU, AU, all the way down the bottom. And I'll look at the sentiment on those crosses. All right, they're really long. CAD Swiss and Kiwi Swiss. They're really short. They're very short EN. Very bonkers. So yeah, just so you know that the reason dollar yen's done well is because it's got a good score, right? And you can see the sentiment as well. I'll show you indices and gold. Now I'm not too unhappy with the robot because the current conditions are obviously very tricky with market, and we're going to put in an insurance policy next week in the form of a trade and stop. So at least we will be out at profit, okay, and that's got to be a good thing. So the big spike down on gold caused them to sell, which kind of makes sense that would happen, but you could probably argue we took some liquidity out on that spike. Some sell orders, no doubt, maybe looking at that potentially, and it accumulated lots of sell orders. No, we'll take those sell orders, thank you very much, and absorb that volume, and up we come. Alright, so be very careful with gold, okay, and so it's going to propel higher due to fundamentals and sentiment. If you see that gold order book video that I published on the weekend, watch that. I'll include a link to that video in this video so you can see it, and you can understand why this is going up higher. Let's do the DAX. They're going long, so 64%. That's very historically very high. they're gone quite long here, so we're going to have to see a flush. Basically, we have to see that break, I think. So be careful. We had a channel break. We did see that sort of reaction from the channel. We might have to come back down. If we do, that's going to be pretty horrible. Let's have a look. Oh god. Oh my god, yeah, we might have to really dump. So the whole point of this is the channel break, retest, then pump. That's a long way away. So you've got to be careful, right? Let's put that back. US 30. So they're going long. Up we come. So they bought really heavily. We nearly crossed to buy, but no, they went long. So we've fallen, and probably going to have to continue to fall for all those reasons I stipulated at the beginning of the video, and the S&P. And yeah, so they've gone long here. And, oh, by the way, note the Gravestone Doji. All right, so there's S&P. So what had happened is that the buyers crept in, but the bears came in and they won that particular battle, and price was pushed down. This is the big fish. When I say bears and bulls, these are the people with like huge capital. The bears won that particular battle on that one. And I'll just go back to DAX again just to show you here, there. And the thing is with DAX, it correlated to the MA crossover, so technically bearish, sentimentally bearish. So you could have got a little bit of profit on that potentially. That could have been your stop loss. It's very tricky though, you've got to be very careful. Robot, now we are undergoing some loss, but I'm not too unhappy about it because you know, we're going to have that insurance policy in the trailing stop, and things are probably going to settle down. You can see how we've created sell and buy on Aussie USD in the space of like 24 hours. It just basically, the bubbles had flip-flopped, gone from one extreme to the other, and then back to the other extreme. So by having a trading stop, we would have captured nice profits on that trade. You know, when we had the divergence and we had that huge turnaround, we would have captured some trade profit on that trade. EA might come down now. So I mean, technically resistance, and then had some support. So it could just be doing testing. You know, just testing those levels. You've got to be careful when things are consolidating. We can see we had a range in a trend in market. They had a break. Okay, so it's quite simple, diagonal break. And you're looking to sell that break of structure, and then you can say, you know, we were trending higher, and now we've got a break. All right, so we're possibly going to come down to test this support again. So be really, really careful. You've got to know your exit. Try and keep your stops tight. So, you know, if you'd entered here, oh yeah, it's just like a 50 pip stop, which is quite wide, but it might be okay. You know, you're looking for a 240 pip profit. You know, you're looking to stop here. You're looking to TP. You know, potentially. So just be really careful. So, but I'm quite optimistic about the robot still. But I think we will need a trading stop in, I think. So that's today's video, and we've got ECB today, and then we've got the Fed interest rate decision on Wednesday, and then we've got the Bank of England on Thursday, and then we've got the Bank of Japan next week. So it's going to be quite a roller coaster, especially with yen, pound and dollar. So remember to trade safely, and I think EA could be coming down to the support, and it's basically just rinsing people out and taking their stops, so you've got to be careful. I wholeheartedly recommend fxsi.com and their indicators for MetaTrader 4 and 5. It's a 7-day free trial, so do have a look. There's no credit card required. You might be lacking in some sentiment awareness, analysis, and it does complement technical and fundamentals very well. Especially if you're very technical, you could be missing out on some sentiment, or if you're particularly fundamental, you could be missing out on some sentiment. This is like a sweet zone. It complements both, and it gives you a very strong bias about direction as well. So technicals are great for direction, fundamentals are great for direction, but the sentiment sits in between. Okay, and so perhaps if you're missing out on some sentiment awareness, these are the best indicators in existence in the world for that. And then you can have a look at this. You've got a 7-day free trial, and you've got your order book. and you've got your indicators, including the ratios, which are amazing. Just look at my videos on my YouTube channel and you can see how powerful the ratios are, and you can have a look. Just take your time. You've got 7 days to trial them, and if you don't like them, then that's fair enough. You don't have to renew, but we do have a code if you want to, and it's just the QDB code, and it gives you a 10% discount, and that's it. So have a look, see what you think, and like I said, it's a 7-day trial, so you don't have to renew, but I think you'll probably find you will renew afterwards, because the order book and the ratios and the stop loss clusters as well are amazing. The stop loss clusters are great because you know where to target. Okay, so that's where you take profit, where people get stopped out. Okay, and that's it. So just a quick plug for the fxside.com, and enjoy your day.